Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Friday, August 31st, 2007. Well, again, we had some fireworks this morning, but again, light volume persisted, and this was mainly due to the holiday weekend that has started now, as it's Friday evening, or about a little after 4 o'clock, about 4:15 Eastern Standard Time. And what we saw today was early in the morning, and I'm going to show you guys that here in a second. We saw some major activity based on a news conference, and I'm going back in the futures to show you exactly where we got that news. Alright, somewhere in this region right here, probably in this general, it probably was leaked out around here, but just in about here we heard that President Bush was coming out to talk about ways to help out the homeowners that had issues with these loans that they took out for housing. And again, that's a major relief for the market, alright? All of a sudden, now I don't necessarily agree with it again, but all of a sudden you're seeing the government come in here again and start to help out those in need, and that's not a bad thing. But what is negative is when those that need help now are the ones that purposely were trying to flip houses for profits. And yes, they're getting their ass handed to them now, but, you know, in all fairness, when you're taking that type of risk to do it purely for profit, that's an issue. And or happen to have taken out a loan that you knew you could not possibly handle, but you assumed your house would rise in value 10 to 20% a year, so it would be no big deal. You could just sell that house or get a new loan or something like that, and all of a sudden housing prices decline. And it's the same thing as the internet bubble, but in this situation, we're seeing the government come in and help the bailout process, which is just not, you know, as far as I'm concerned, the government needs to stay away. And what's interesting here is that Bush initially in his, and you guys, CNBC actually talked about this, Bush initially came out and talked about subprime, but then when he talked about the bailout, he said they were only going to help those with good credit who couldn't handle the loan based on circumstances involved in the whole process. So it's very interesting. He kind of talked about subprime in the beginning, making it look like they were going to help subprime. In either way, in the end, he basically was saying, guys, we're just going to help out those with good credit here that got a little over their heads, and because they're going to have to pay the money back, they're just going to have to refinance to get it to a more manageable payment per month. And that's what he said in the whole press conference, which, by the way, guys, from what I've heard, it only affects about 80,000 households. So it's not a giant thing here, guys. But in any case, you see the move up in the futures here. Big move up here. This got us off on the right foot today, and we continue to move higher. And I'm going to go down to now where the market opened. All right, well, here's the pre-market. Right here, 9 o'clock, 9:30, the market opens. Right away, we see a little selling action. So again, this whipsaw continued today, and those amateurs that were trying to jump on the right side of the trade here got whipsawed left and right and every which way. All right, and what do I mean by that? Well, here's 9:30. 9:30, we're at the highs basically of the day, and right away we start selling, little bounce here, selling. We go down basically 10 points on the ES. That's quite a move on the ES, all right? And up we jump here, all right? Then Bernanke comes out here, and this is why we get this little move up, but then all of a sudden the markets get slammed again, all right? Once Bernanke's comments come out, the markets get slammed again. But then, of course, we have George Bush coming on the TV, and the markets start rallying up here as George Bush is talking, rally to a new high, all right? Then again in the early afternoon, we start to sell off a little bit. We get to this moving average, and we kind of just stay around the 50 and the 20 moving average levels right here and just trade sideways and up, make a new high. And then this is what bothers me, guys, and I'm going to get into it a little more. You know, we're talking about how we want this market really to be, if we're going to see more upside in this market, we need substantial moves higher. We need the financials to participate. We need to break out above certain resistance points in this market. And what happens right at the close here? Look at these two sell candles. Sell, and then even after, market closes in this candle, at the bottom of this candle is 4 o'clock, then the selling after continues, makes even a new low, almost to the lows earlier in the day. Okay? So what are we seeing? And then afterwards, the volume lightens up again, and they're able to bounce this market up to close it basically flat from this candle over here, flat. But again, what I want to point out here, and let me get out my trend tools. All right, my trend tools help me show you guys all this stuff. First of all, look at this volume in the last candle of the day. What's going on here? If this market is so strong, if this market continues to make all these pushes up here on light volume, you know, and I'm doing the quotes with my fingers here, why do we see the last candle of the day, the gigantic sell volume? What is this telling us? And listen, you know, we play the market whichever way it goes. We read the technicals, and that's the way we jump on the trade, and that's the way we've been successful making tons of money. But again, you have to take note here. This is the last candle of the day, and look at the size. I drew this line across because I want to show you how not one candle through the whole day here, and especially these over here, this is about 1/8 of the candle. And these candles are about 1/2 of this final candle. And even this last one where we dipped lower here was the second biggest candle of the day, basically tying these up here. Actually, it did outdo them. Not by a lot, but it still did. So again, the question begs to be asked, what's going on here, folks? Are we going to push up? If we need to see continual moves up like this, what we need to understand is that the volume on the up candles, this volume needs to be an up candle, not a down candle. So I beg everyone to be cautious here on the upside. I want to just point out a couple patterns here. What did we see here, folks? We saw a pseudo W pattern. All right, and we all know that W patterns mean that the market's going higher. And again, we got that move up. Or if you want to play the game of a WV pattern, you could play it like this. We got this micro pullback and then another move up. So you have the W, the little V pattern, and to new high. But then again, what happened next? And let me take away these little lines so I can really show you guys. Well, if you take away this line and you negate, basically the market makes WV patterns or MA patterns. And what do we have here? Basically from this low to here, down to here, up to here, to a new high, which this is the more substantial move because you always want to see the second side of the M making a higher high. Then we see this sell option. And what pattern is that? That's an M pattern. And then this dictates we should see an A pattern and a fall. So again, we'll see how things play out Tuesday. Monday the markets are closed for Labor Day, but Tuesday the markets will be open. We're going to have semi-light volume. It's stronger the volume than the last, hopefully, week because people are back from work. But you always have that hangover effect where the market should be, up in the air here, not full strength volume. So really Wednesday we're going to see the big move back in volume. But I want to point out this stuff. First of all, we had this big sell candle here, and then the M pattern at the end of the day. And this big sell movement right here is very disturbing. All right, I want to jump on the bulls bandwagon. I want the technicals to tell us that we're going to break to new highs here so we can all go long at my firm, InTheMoneyStocks.com. But until we see some different technicals here, and until these charts dictate something different, we can't. Now, the other thing I want to show you is the Nasdaq, which has been really the leader here, guys. And we've been saying that for a while, that the Nasdaq has been the strongest one of the bunch. And I want to show you guys the chart here on the Nasdaq. All right, this is the daily chart again, guys, and you see again this sell candle right at the end of the day, which worries us. All right, you shouldn't see that. Granted, a lot of people might want to exit the positions before Labor Day just in case something happens. But again, when you see that amount of volume there, that tells you that big money is dumping. That is the Nasdaq daily chart, and what we saw here in the Nasdaq this week was more strength, as we just said before. The stochastics are getting higher here. The stochastics are all the way up here, which is almost parallel on the topping pattern right here. In addition, what I want to point out is, let's do a Fibonacci retracement here. And I talked about this a week and a half ago about where the market, we were looking originally for this market to top out. And I just want to point something very interesting out. You take the high of the market there, the low of the market here, and you find out the spread. Okay? So you find out the difference in price from this point to that point. And that point, figured out, shows us a certain number. And let's do that math with everyone here. Alright? So we have, right at the top of this candle, 27.25. So 27.25. We subtract the low of this candle, which was 23.87, minus 23.87, and we get 342 points. Now we multiply that by 0.618, and we get 211 is the Fibonacci retracement. So a bounce off this low of 211 should give us the Fibonacci 0.618 retracement. So let's do that. So we add the 211 to the low of this number here, 23.87, 23.87, and we get 25.98. What number did we hit today? We hit 26.03, and 25.98 was the fib retracement. And what did we close at today, guys? 25.96. So we're virtually right here on the Fibonacci 0.618 level. In addition, that coincides here with the 50 moving average, which we closed exactly onto a T, guys. So while we want to look at this and say, all right, guys, well, maybe we could see a move up in this market, we also have to throw out a little caution flag. We had the light volume this week, and in addition, what we saw here is a close right on the 50 moving average, which is resistance. So until we close above this 50 moving average, we can't start to get bullish here. All right, All in all, the last thing I want to show you guys is really what happened this week. This is the daily chart of the ES, okay? And what I quickly want to show you guys here is just where we ended up from Monday to today. All right, here's Monday, or here's Friday, here's Monday, and where did we end today? Basically, this whole week, all in all taken into effect, guys, the ES future chart is lower than we started Monday. And that's key, guys. Remember that. Have a wonderful, safe holiday. Be good to everyone. Keep in touch, and we'll be back on Monday to talk more about this market. Take